Thanks. The government's Cash-For-Clunkers program sharply boosted July car sales, and new statistics from the Department of Transportation show foreign automakers, not U.S. companies, may be benefiting the most. Our Greg Miles here with more. And Greg, some questions from critics about, whether this money is being well spent.
By the way, I assume that you've got 4 or 5 clunkers that you're trading in sometime.
Not really,
that extra $2 billion comes out. But I just want to point out here, I just really cranked the numbers here, from the month of July, and it appears to be that Japan's big 3 automakers, for example, Mark, are really benefiting hugely from this program. When you look at the sales gains in July, compared to the month of June, they were bigger than Detroit's big 3 automakers. And if you take a look at Toyota, the world's largest automaker, their unit gains in the U.S. in July were twice as big as General Motors, And you say, well, what's going on here? Well, one thing is everybody knows that the most popular cars made today in the U.S. are made by foreign automakers, especially the Japanese. If you look at this chart here, the top sellers in the DOT program, they're the Corolla, the Civic, the Prius, the Camry, all the most popular cars. The only one in that top 5 is the Ford Focus made by Ford Motor. So it is understandable until we start making more smaller cars, the U.S. automakers, that number is going to be low.
Greg, what are those Department of Transportation numbers telling us about fuel efficiency?
Yeah, they were really striking. When you looked when this program started out, Mark, a lot of critics said, look, this is not going to work. You're not going to be able to dramatically increase fuel efficiency, But then these numbers came out late yesterday, on the difference between the clunkers that were handed in and the new cars that were bought, and it increased the mileage per gallon from around 15 to 25 miles per gallon, That's a 60% increase. One thing more striking about it, by the way, we crunched the numbers again here in the Bloomberg newsroom. We looked at, let's say you drove 10,000 miles, in that new, more fuel-efficient car versus the clunker, you save about $600. And as you know, if you're laid off or if you're on a tight budget, $600, that's a lot of money.
Would extending this program another $2 billion give it the same amount of boost as it did with the $1 billion?
Well, there's a big debate about that because a number of analysts point out that the inventories were drawn down dramatically, during this first $1 billion push. Some automakers are increasing their production, but it's unclear really whether you're going to get the same bang out of that second $2 billion.
And speaking of getting a bang, how about the U.S. automakers? Is it going to help them financially?
Well, in the short term, cash is cash. It doesn't matter where it comes from.
Sure.
And if you're a Chrysler or a General Motors and you're still struggling after you've emerged from bankruptcy reorganization, getting that cash on the door is very, very helpful. The problem is that some people argue that when this program stops, that cash stops. Then you got to get it from the natural growth in the economy.
And we were talking because yesterday you were out in Long Island City, Queens. What was the sense that you were getting when you were out at Major World at that dealership yesterday?
Well, you speak with people out there, it's like a breath of fresh air. It's euphoria. It's been like you've been in a desert, and you haven't tasted water for 2 months. That's what these guys are feeling like. But at the same time, there's a sense of exasperation on the part of the owners because credit now is still so tight,
And
it's only the best.
That's what the CEO of the company was telling you yesterday. It's like the program could be there, but unless that credit frees up, what are you going to do?
That's right. I mean, so that means when you're looking beyond this program, that's a very important thing. Everybody's very enthusiastic about this Cash-For-Clunkers program. It's given a jolt, a sense of enthusiasm to the industry, even politicians in Washington. But the bottom line, you've got fundamentals in the economy which still remain. That includes low consumer confidence, high unemployment, consumer credit tightness. That all is a barrier, really, to a long-term recovery.
Bloomberg's Greg Miles covering the autos. He's the best in the business. Greg, thanks very much.